We finally managed to do it. We finally managed to get a new all-time high on the S&P with a crap ton of shorts still in the market. So where can we go from here, guys? So throw down in the comment section below where you think the market is going, if you're team bull, team bear. We're going to be talking about the earnings for next week, Tesla and Netflix in particular, the levels that we're going to be paying attention to, and sneak peek, that level is 480. It's the level that we had to break above, why it's so important, what we're going to be doing around that, and how we can actually make money off of it in a very simple, strategic way. We'll be talking about the theta portfolio as well in this video. So jam-packed video for you guys today. So make sure you guys hit the like button down below. It really helps the YouTube algorithm, and consider subscribing. We do live stream the earnings every single day that there's major earnings. So obviously Netflix, Tesla, and PCE this week, we're going to be streaming all those days, and Apple, Microsoft, Google, Amazon, obviously next week along with Meta. So it's going to be a jam-packed week at that. So without further ado, let's dive into the video. What happened this week? Well, I got creamed completely on a position. I tried to do a IV sell on the indexes, and then we have a gamma squeeze. So for all those that don't know what that is, IV, which is implied volatility, went up. So the VIX went up. I tried to sell volatility here on the indexes, trying to capitalize on that contraction. However, it would have worked out if, well, we didn't have a complete gamma squeeze. Gamma squeeze is when you have a massive move on the stock market, as you can see here. In a 2-day move, we covered the range of 2.5%. So that's massive, massive, massive. If you're looking at it, that's nearly $10 move on the S&P alone. NASDAQ was even significantly more. So remember, for every dollar the option contract moves, you gain or lose money, and it really got one-sided to trade. I thought we were actually going to stay range-bound for quite some time going into the PCE print. That's what I was theorizing, and then the market basically just handed me a new one. However, you win some, you lose some. That's how life is. So looking at where we could keep going, 480 is going to be a very, very key point. That we'll be talking about that in the key level section of the video, so it's all timestamped below for you guys, so you can skip to any part of the video as you wish. But first, I want to talk about a couple things, a couple public disclaimers or notices. We got reverse repo sitting at 625 billion. So this is around that level where it's just kind of going stagnation. We kind of see this from time to time where it goes stagnant. The bond market is kind of reacting, kind of like pricing in different cuts and stuff like that. But we really have to see that 2-year and the 1-year kind of do something more than this. So if we just go here, we can see bonds kind of pushing up, maybe forming that inverse head and shoulders right here on the chart. However, that, like Warren Buffett says, do you have the patience to see the pattern play out? We could very easily just send right through this, and then we have no confirmation whatsoever. The 20-year kind of struggling around that 50, along with the 10 and the 30 as well. However, strong trend to the upside in longer term debt, kind of indicating maybe some of that price action or cuts are being priced out further. And speaking of price cuts, as usual, we have the CME tool pushing the March cut out completely. So now we have no chance or no change as the dominant criteria for the market going into the Fed meeting. So that's more pushed out to May. So kind of really haven't seen this really hit the stock market. So it's going to be very interesting, but really the stock market doesn't care. It's just saying 480, new all-time highs, bulls out there. Are we going to see corporate earnings kind of put a damper on that, or are they going to spark even more bullishness in the market? And just quickly recapping what we had this week. Monday was a pretty damper week. We had Empire State Manufacturing, massive miss. I mean, this is going to like recessionary territory of contraction, but the market doesn't care. Like, the market's a very short-looking view, so they don't care. Recession I hear right now, we don't care. So this is more of that macro scenario where you really can't trade the market off macro. Yes, in the long term you can, but right now the market's just basically piling up harder, and every short that's trying to short us is getting blown out completely. So core retail sales coming in nice and hot, so that's going to spur some of that growth in those bigger companies. And we have capital utilization kind of just missing a little bit. Thursday was some of the bigger news. Building permits and housing starts, kind of a mix right there. So previously got revised upwards, I should say downwards, where housing starts are seeing that contraction. We're seeing one of the worst Decembers in housing. So now we're starting to get some evidence that housing is softening in the US economy. However, we don't have any empirical evidence that shows that we are in a housing crash. Home starts are basically in line. Continued jobless claims, people basically not initiating or going off jobless claims, so therefore they're being employed. We talk about the nuance of that. I know everyone's going to riddle the comment section with, well, that's not new jobs, it's actually second jobs. We get it. But this is what the numbers the market's running off of. Building permits, so good, and good. So not really anything bad. Crude inventory seeing a draw, so that'll bolster crude. And Friday we had existing home sales come in as a massive miss. Well, this is kind of good, right? So it's bad and good at the same time. It's bad because you want to see housing keep going up. That means that the net supply is going to start growing, but we still have a huge amount of demand in the markets. So you're not fulfilling that unequilibrium right there. And we're still going to be driving that inflationary tendencies of shelter to go up. As we saw with the CPI report 2 weeks ago, shelter inflation hasn't budged. The Fed has basically said, like, kicking the can down the road of it. So it may be a sticking point. We're going to see how PCE comes out on Friday. And Atlanta Fed GDP now coming in line. And as always, we're going to take a look at our good friends, net short positions doubling down, as always, getting ready to get blown out. That's why I'm like, okay, they're just doubling down, trying to play the macro rather than just playing the chart. I tried shorting a call and a put. I did an iron condor on S&P and NASDAQ. I got completely blown out because it was a gigantic gamma squeeze. So seeing these net speculative positions, especially on that Friday close, well, that's pretty interesting because they were getting hammered this week and they're just going to be more fuel. So this tells me that this 480 is going to be a huge buying opportunity. And we're going to be talking about later in the video what parts of the chart we have to pay attention to if we break and how do we participate in the market. Then do we flip bearish? Do we kind of just hedge? We'll talk all about that in the key level section part of the video. And as always, Fatal will now give you the biggest winners and losers per sector, and I'll be back for the key levels.
So markets have been on the up and up ever since January 18th of 2024, reaching a low point this week of 4,716 points as of January 17th at 1:40 p.m. and then gapping up massively into the 18th and just reaching 52-week highs, as you guys can see over here, 4,842 points. And in fact, we are at all-time highs when it comes to the S&P 500, where I believe the previous all-time highs was around 4,793 points. When looking at this week's past earnings, we can see that on Tuesday we had companies like Goldman Sachs, Morgan Stanley, and PNC, which we did cover Goldman Sachs and PNC on the live stream. On Wednesday, we got Charles Schwab, Alcoa, and Discover, which was also covered on the live stream. Thursday, TSMC, Fastenal, PPG. And Friday, we got companies like Ally and Travelers. Now, when it comes to next week's earnings, this is going to be jam-packed. It always is, right? We got on Monday after close, United Airlines, which we are going to cover on the live stream as well as Logitech and even AG&C. Tuesday, we got a lot of big names here. Verizon, Netflix, 3M, GE, Texas Instrument, RTX, Johnson & Johnson, Halliburton, Baker Hughes, Lockheed Martin, Procter & Gamble, and D.R. Horton. On Wednesday, we got another jam-packed day of earnings with big names like AT&T, Tesla, ASML, IBM, Abbott, Progressive, Kimberly-Clark, SAP, and Crown Castle. On Thursday, we got American Airlines, Next Era Energy, Intel, Visa, Alaska Airlines, Southwest, Next Era Energy Partners, Valero, Blackstone, Union Pacific, and Levi. And on Friday, we got American Express, Booz Allen Hamilton, and Colgate. When taking a look at now the heat map of the 1 week performance, we can see that, guys, even though the S&P 500 did gain, it was mainly buoyed up by one sector, and that was the tech sector. That's it. So I'm looking at this, I'm like, great, all-time highs, except that, well, you know, you have major companies like Tesla, Morgan Stanley, UNH, CVS that didn't do too hot. Even though on Friday we could see that a lot of them gain in the overall week performance, though it really isn't that impressive. Let's take a look at now the technology sector. Worst performer here, it is none other than the company Enphase, losing 9.36%. And the best performer, it is AMD, which gained 17.71%. Current share price of $174.23. I have a big thing with this company. When they actually release earnings, we will cover it, and I'm probably going going to get a lot of hate because, well, my opinion of this company is very, very, I guess, unique, you could say, or at least very counterculture. Looking now at the communications sector, worst performer here, it is the company IPG losing 2%, and the best performer, by the looks of it, it is Disney gaining 4.04%. The consumer defensives was by far the worst sector. Worst performer here was the company Estée Lauder losing 9.14%, and the best performer was Costco. There's actually only four of them that gained, but the main one was Costco gaining 3.18%. Now, the healthcare sector is one I'm really excited to look at because, well, a certain company here is down to almost sub 500, and that's the company UNH. If you guys have noticed in my past videos, I have covered this company, and I'm very interested in this company. Their fundamentals are insane. So I look at this and I'm like, I really would like for this thing to fall even more. Nonetheless, though, worst performer was the company Humana losing 11.75%, massive, and the best performer overall, the company ISRG gaining 3.45%. The financial sector was the one in the microscope this past week, and even the week before, with the banks having earnings. You can see they did not perform too well this week. However, the worst performer was the company Discover Financials, which we did cover on the live stream, which lost 12.5%. And the best performer, it is none other than the company Travelers, which I do plan to cover in a video, I believe today or even tomorrow, Sunday, where they gain 8.62%. The consumer cyclicals is very 50-50, honestly. Worst performer here, it is none other than the company VF Corp losing 7.37%. However, the big one here would definitely be Tesla, losing 6.62% on the week. And the best performer, it is the company O'Reilly Automotive, gaining 8.84%. The industrials really kind of went nowhere, as y'all can see over here. Worst performer, it was in the airlines. I love how the airlines just looks completely crazy, where only Southwest Airlines gained and all the other ones lost. Worst performer here was United Airlines, which that wasn't even their earnings week, and yet they still lost 12.78%. Probably has something to do with the controversies when it comes to the crisis that's currently happening in the United States and them. And overall, though, the best performer, it is none other than the company Fastenal, gaining 9.42%. Looking at how the real estate sector really underperformed, as you guys can see over here, worst performer, it is the company Realty Income, losing 4.64%, and the best performer, it is the company DLR, gaining 2.5%. And by the looks of it, the utilities are also underwater, as y'all can see over here. Only 2 of them gained, and yeah, that's very interesting. Majority of them lost. Worst performer, it is none other than the company ES, losing 6.5%, also followed by, of course, AES losing 6.32% and NEE losing 5.7%. The green ones in the sector, though, were the company CEG, gaining 1.36%, and the best performer was the company NRG, gaining around 4%. The energy sector, it is looking like a complete bloodbath. Only 2 of them gained, and 1 of them was essentially flat. Worst performer here was the company APA Corporation, gaining 6.44%, and the best performer, it is the company SLB, gaining 1.72%. With everybody else losing a whole lot, the only one that was remaining flat was the company Valero, gaining only 0.13%. And lastly, when it comes into the basic materials, we got over here the worst performer being none other than the company ALB, losing 10.51%, and the best performer was the company Sherwin-Williams, gaining 2.22%. Overall, though, even though the markets did make all-time highs, guys, guess what? Majority of this was brought up once again by the tech sector. The tech sector just keeps bringing everything up, which, you know what? I'm okay with that, because if that's going to cause other companies like UNH, as you guys can see over here, or even a company like NEE, or even Southern Company to fall, then you know what? I'll take the W and buy into the companies that are falling and not buy into the massive craze, into the massive hype that the tech sector has been having for the past, 4 years now. So it is what it is. That pretty much does it for this video. Make sure to like, subscribe, comment. Really does help here with the algorithm on YouTube as well as Rumble. So with that said, take it away, Mike.
Of what we have to do for the week. You can do this and follow along as well on your chart. So if you're new to the channel, welcome. So we basically snap lines to the weekly range on the S&P. This is the weekly graph right here. So we're seeing that we have areas of importance, and as always, we're going to be talking about those areas. So I'm snapping a line to the previous week's high, which is 478.60. If we start breaking below 47,860, I basically have alarm bells going off in my head, because that level is not supposed to be breached. We're not supposed to come back down there. We're supposed to be breaking above this upper level, start making trends, start higher like we did back here, where we broke and just kept going for several weeks to basically setting new all-time highs every single week. So my expectation for this week, because we closed nearly 30 cents away from the all-time high for the S&P, is that we're going to basically continue, and tech is basically going to continue. 480 or 479.98 to be exact is going to be the line in the sand that we want to see. So somewhere in this 480 to 478 is going to be an area of buying support. So this entire region right here is where you're supposed to be buying if you're wanting to participate in the market, and your stop loss is basically 478.60. That's as simple as we can make it. You start closing below 478.60 on a closing basis, well, we got more and more problems out there in the market. Now we could actually come down all the way maybe to this gap fill at 476, but that would really start shifting the momentum to the downside, and I really don't want to participate in the downside momentum, especially in this area of consolidation that we basically had here. We want to see this expansion now. We want to see continuation. That's not to say you have miniature 1% pullbacks in that expansion, but the general trend is going to be to the upside. We could very easily see 490, let's say this week, especially because we got that PC catalyst on Friday, seeing another, let's say 2% week. That will put you right at saying the same week, 493. So 490 would not be out of the realm of possibility, especially if we get the nice short squeeze that we basically covered here, that the net speculative positions, they're just fueling this fire. So yes, they may be right, but 2023 taught us that they basically were wrong the whole time. And you guys know, price and volume, got two green check marks right there of what I want to see. So am I going to be looking bearish in this? No, until we get below 476 at the minimum, that is when I'd be looking more bearish, but as a cautious bear. Until then, it's only bullish plays. Now, we do have Netflix and Tesla coming up, but those earnings are expected to go stellar. And speaking of tech, right? NASDAQ, just an absolute Chad, just completely pushing up higher. This previous pivot for 1292, we're actually going to change this to white so we can see this is where we previously all-time high. So now that should be support. That was resistance. Now it should be support. And the NASDAQ just has one of the most massive ranges out there this week. So you're looking at, for the next week, a 4.25% range. I don't think we're going to get down anywhere close to 402. 412 is like a maybe stretch, honestly. So really, we're only looking in one direction, up, up, and up. Now, a lot of people say you shouldn't be looking in one direction. Well, I'm just looking at what the market's been doing. It's just been trending up. We had consolidation in this region right here. So now we should be going to an expansion area territory. And again, if we assume the same thing of the S&P, another 4% would bring us to 440 on the NASDAQ, which would just be absolutely massive. All the shorts would get absolutely creamed. And as always, one of the things I always preach about, price and volume doing the exact same thing. So it's what more do you guys want? Price and volume supporting both, trending up higher. You got your 412 location. That could be your gap fill. That could be this. We could do 478 on the S&P. We could do 412 on the NASDAQ, and that would be a massive buying opportunity. We do have a sell signal right here on Lux Algo. However, that could also just signal a small pullback in the market. So we're actually not really too worried about that. We are hitting that reversal zone. So we're definitely expecting a pullback, maybe seeing volume kind of calm back down, pull back to this 412 area, and S&P. Could be a calmer week, but again, we got earnings. So Tesla and Netflix earnings, and we'll be covering them shortly, talking about where I think they're going, what I'm going to be playing, and all that and more. But first, I really want to go over VIX dollar and yields, kind of give you that broader market update. So take a look at VIX real quick. As we can see here, just plummeting lower, not really seeing volatility. We do see maybe that we're in this channel right here for volatility that could be trending up over a longer period of time, seeing more volatility in the market. That would be good for option selling premium and kind of shift from that 0 DTE option strategy because it requires a tight range, but still will give them a general range that the VIX could come to. So if we just kind of trend this out to see how this is all going to play out, and we'll keep you guys updated of that, we can see that we're kind of establishing this channel, this broadening channel right here for VIX. So we could see larger swings in volatility, could find support and then have a pullback in the markets where VIX kind of just pushes up higher. So it's going to be very, very interesting to say the least. But jumping back to the S&P real quick, I just want to point one thing out. And that is, we have two indicators. The MACD is almost crossing back over, and the smart money flow is showing bullish signals. So we do definitely expect an expansion in the markets. NASDAQ has a similar, actually cross back over, and we do have maybe a possible divergence. But as you can see, we got plenty of room to run on the MACD before we get anywhere like to the bearish side. Smart money is just pushing up higher and higher and higher. So just a natural run on the S&P. Could be looking more heavily at S&P versus the NASDAQ. And then IWM, I did forget to cover you. So for all those that trade the Russell, you're looking at really pushing up higher. We kind of saved the week. We got this bearish trend. We need to get back above 1930 to really get that bullish momentum starting, and then break above 197.10. Russell has some insane moves, and your stop loss is going to be 191.30 for the week. So we have to basically just see how this all plays out. Rotation 193.27, breakout 197.10, and then stop loss 191.30. Or do we see continuation? We're kind of seeing that volume coming in on the Russell right here. So definitely Russell and S&P would be the two trades I'd be looking this week, because NASDAQ's really pushed. So you're not really seeing that potential as you're seeing in the S&P and the Russell to really play a trade out. So we have to see how that all plays out. Last but not least, let's go quickly to the dollar really quick here. As you can see, pushed up higher, kind of just failing in this area. Could be coming back to that $102 mark, and yields, like we covered in the beginning of the video, aren't really doing much. They're trending up higher because we're repricing in rate cuts expectations, but it's not really doing much. So now the bigger ones, Netflix and Tesla. So starting off with Netflix, as you can see here, going back to earlier times, we do have this longer trend line that was our support from here that we broke, pushed back up off of earnings. So Netflix is just kind of sitting in no man's land. So it's a very interesting play, not really running anywhere. So you could expect a very large delta move in the stock. We are skewed more bearish on it if you're looking at the range for the week. However, we are coiled up. So really earnings is going to be the thing. Last earnings was pretty interesting on Netflix. And as we can see, reporting on Tuesday after the bells closed. So going to be playing probably a butterfly on Netflix, just because I don't think necessarily that they're going to have like a 10% move. However, I think you're going to get one side skewed, and we're going to have to look at the analyst expectations to kind of play that out. I'll make sure I note that in the Monday video for you guys, so you guys have that to cover. I will actually be recorded on a Monday and then released on Tuesday. So make sure you guys check out and hit the like button down below, so that will help you with knowing when that video comes out, so we can go over the Netflix play and also Tesla. So Tesla right now sitting in the support price action zone that came off of the previous earnings area here. So we are skewing to the bullish side with Tesla, especially seeing how they're hitting orders right now. So this move downwards, it could be buy the rumor, sell the news type, but I'd be looking at this. You really exhaust a lot of that selling pressure going into earnings. So I'd definitely be looking more bullish skewed, iron butterfly, probably to the upside on Tesla. And again, their IV is insane. So there's not a lot of downwards movement, especially just during the reversal zone. So the skew is like 75-25 for the bullish versus bearish on Netflix. So that's the recap for the stocks this week, guys. Let's just quickly jump over to the calendar and see what we got for next week. And really, it's not much. Monday, Tuesday, we talked about Netflix earnings, aftermarket, and Tesla earnings, I believe, are on Wednesday. Yes, Wednesday. So we got two earnings dates. Wednesday, nothing really much. Global services PMI. And so everyone's going to be looking at Netflix and Tesla. That's going to capture the news. Once those are done, then we got quarterly good orders and GDP Q4 preliminary print, expected 1.8, previously 4.9. So we know the contraction because of that government spending in the GDP. New home sales, another data point for the housing markets. We'll be talking about that in next week's weekend deep dive. But really, everyone's going to be looking at Friday. Friday is going to be that core PCE prices and PCE for the year. The expectations are not yet published, but we're seeing an uptick on the month over month, a decrease on personal spending, and then personal income and personal spending staying flat. So we'll cover this in the midweek update video for you guys so you can see what the skew is on that, how the market's reacting, and everything like that. So as always, we're going to go into the debate section of the video now. We're going to just basically talk about what our plan is for this week and current news events and stuff like that. So thank you all so much for watching up to this point. If you would like to minimize the video and just have a talking head video, we really appreciate you guys. And if you would not mind hitting the like button on the way out, it really helps the YouTube algorithm. So without further ado, let's get into it. So I think we'll kind of touch on PCE just for a second. I expect it to be similar or come in line with a CPI, where it's kind of going to play into the narrative of inflation's kind of coming down, but it's taking a little bit. I don't think we're going to necessarily get like a surprise, especially with the personal spending kind of in line, and then like core is looking to tick up. So it's the same. Remember, CPI ticked up 0.1 on the month over month for core. So what do you think is going to happen during this time?
Nothing. I think we're going to be in a lull up until, perhaps up until even Q1 earnings. I think that's when we're going to start seeing, a little bit of more
volatility.
I don't even think we're going to see any volatility. I don't even think we're going to get anything up until like March, maybe even April.
Oh, so
right?
You're saying like next earnings season? Because I'm like, you said Q1. I'm like, well,
we're not in Q1.
Well, we're in earnings
we're not.
Of Q4, which are reported in Q1. I'm thinking of that.
Correct. That's what I meant. No. When I say Q1, I mean Q1, as in like in Q2 we get Q1. That's what I'm referring to. But yeah, I just don't think we're gonna get much of anything until Q1 earnings actually come about, which that will be April, May, June. So I think that's what's gonna happen. And to be fair, I'm kind of just skipping along. We still have to see, I say that we're not going to see much. However, we have massive amount of earnings still to come, right? We don't have big tech yet. Big tech is next week, the following week. But this upcoming week, we got big ones like Tesla. We got big ones, AT&T. What else do we got? Verizon. Right, we have big companies that are going to have earnings this upcoming week. So I'm not really sure what's going to happen. It's going to be interesting because, markets right now are rallying mainly because of just tech.
Yeah.
Literally.
But
I love it because...
We saw that in 22, 20. You saw that the market of 2016 to 2020. Tech, because it's such a big market cap, has a lot of influence on it.
Right. I love it because we got a comment saying that like we're dumb bears, even though like we broke all-time highs. And I'm just like, have you taken a look at it on the 1 week? It's only tech. Tech is the only one, specifically AMD, bringing it up.
But it's like, how to put this? Like, okay, so you had... When we made those comments, we didn't have the gamma squeeze. We were talking just to put into perspective when that video was made, guys. Just for reference, right? We're not trying to...
The live stream specifically.
Yeah, the live stream was when we were on this area right here, where we were basically just we were failing to hold the highs. Yes, we were making higher highs, but there was a lot of sideways action. So we were basically saying like, okay, decreasing volume, increasing price. It's not something that everyone was excited to be about. And we were heading into... not really a big news catalyst event. We were basically, this entire section right here was non-catalyzed events. So we really didn't expect TSMC to ignite like this massive chip rally, but apparently everyone's basically like piling into chips, which yes, you could have seen that, but no one... I'll put it like this. If the person that made the comment made money on chip rally, congratulations.
Congratulations.
Yep. You don't have... We don't claim to be like, look, I'll argue like this. Short term, you're bullish. I constantly talk about on weekend deep dives. I encourage everyone to look at this, is net speculative positions. I got my butt handed to me back in 2022 looking at net speculative positions, but I learned these are morons because, simply put it, they're adding into a short position that has been... Let's just take a look, right? So from December 15th, they added all the way now. So, right? So let's take a look where December 15th was. So just for perspectives, for shits and giggles, let's take a look at December 15th. What happened on December 15th? Well, right here. So we were right here. So they were break even 2 days of the year. They were break even. They made $0. They lost money the entire way. And they are still doubling down as we go to a blue sky breakout. So I'm like, I hope we go to 480. I hope we go to 478, because the one thing I've been complaining about is that we don't see volume and price confirm. And congratulations, we just got both. So that's 2 green check marks. You can be easily bullish on this market right now for the short term until something breaks below 480. As long as you're above 480 for the year, it's very difficult to stay bearish on the market, because that's your previous all-time high. It's 480 was the line in the sand. It's an annual breakout. And okay, so there was no evidence on the chart when we made those statements that you were going to go to a blue sky breakout. Now there is evidence on the chart that you are at a blue sky breakout. For me to go and tell you to be short now is a absolute dumb idea. And all advice is given at the context of when the market is. Again, we're literally forming a W right here. I'm like, I tried doing a premium sell. I openly talk about this. That handed me my butt. Guess what? You're not going to win every trade. You're not going to, and it's always, the thing is, hindsight's 2020, right? Everyone can say, well, if you only invested in Pepsi like when Warren Buffett did,
right,
at 70 cents
right,
a share, and it's worth how much now?
Right, or like Amazon or something like that. And when it comes to my end, well, I even talked about this during my section. I'm like, I personally, I don't know about you, but I'm not a bull or a bear. I just look at the situation and I'm like, okay, where can I find opportunities?
Yeah.
Right? Would I like it? Would I like it for things to go down? Yes. Are things going down? No, the S&P 500 is not going down, but I'll tell you what is, and it's a company that I literally just started talking about a few weeks ago. It was like 3 weeks ago.
UNH?
And it's UNH. UNH has fallen. It's about to be sub $500. So I look at this, I'm like, why the hell do I care if tech goes up? I don't care. If that means that I get great, if that means I get a great price on a whopping company like UNH, which their fundamentals are, they look fake, right? Usually when fundamentals look like that, I'm just like, this is insane. I don't care if the market goes up. Would I like it if it went down? Yes, I would. I would like a 40% haircut on everything. But, you know, there's always going to be opportunities, right? Money will always roll over from one area to the other. So I personally don't care. And by the way, who was the one that was saying we're going to reach 52-week highs by the end of December?
And a light switch and that the bear market's over. I'm like, yeah, I've lost my track record to him, so I'm not even going to argue, guys. But it's, like we said, it's about opportunities to make money. Like, for example, you're going to have trades that are going to work out, and you're going to have trades and opportunities that are not. I looked at, okay, VIX high, S&P sell premium. It didn't necessarily work out, but guess what? Okay, that didn't work out. You're in a gamma squeeze, probably going to continue. So don't try doing that. Like, a lot of people kind of want to talk about Tesla real quick, because this is going to be, I think Tesla is going to be a really aggressive example of buy or sell the rumor and then do the opposite on the news. So the rumor is Tesla's going to have horrible earnings, right? You're selling this thing off into earnings. Everyone knows my pet peeve about companies selling off into earnings. I'm like, now, full disclosure, this could absolutely completely roast everyone, go back to like $172. Again.
You mean fall to $172?
Yeah, you could easily have a gap on earnings. Like, let's just be realistic here. But here's the thing. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 times or days that you could have sold this company at a higher price than you are now. So unless you catalyze it through the earnings and you're in a support zone right here, yes, everyone's expecting Tesla to miss massively. Here's the contrarian view. If they don't miss massively, they're expected, let's see, estimated 0.62, normalized EPS estimated 0.72, and previously, so they're expected to
0.74.
Yeah, so they're expected from the last quarter to make more money per share and increase their revenue, but they're looking at the revisions have been lower. So Are we setting the bar super low to then beat it, or are we basically just setting? Because remember, I was saying in 2023 that a lot of these companies are having massive, like high expectations, and it could be very interesting, especially like we saw JP Morgan, massive expectations upside, kind of like, fizzled out after the day, and then all the other banks were like just crap. But looking at this, I'm like, okay, sell rumor, buy news. That's how I'm going to be playing it. I'm definitely going to be playing Tesla to the upside just because I'm like 15 days of a trend down into a catalyst event. I'm like, I complain about this in the opposite way. Why would I not play the contrarian here? So that's what I'm going to be doing for Tesla. I'm definitely going to be doing probably a butterfly 216 to 240, probably some nice wide butterfly, and I'll make a video on that for the Tesla and also for Netflix. Like I would love to talk about Netflix too, which is like the complete opposite, right? They're expecting only a 0.2 billion increase in revenue. They're expected to do less on the GAAP EPS than last quarter. So a lot of them are getting revised higher. So this could be a very interesting play to the upside, especially with Netflix. I covered in the beginning of the video that it's just going sideways. So whatever this does is going to do something massive. Like this is just a coil of nearly from December to now going literally nowhere. So this is going to be either a bonkers breakout, and I actually want to take a look on the weekly where we're at. So this is very interesting. And do you know why this is interesting?
No. Cup and handle. No?
You're close. It's more about...
Oh, wow.
See, hey, broken clock right twice a day.
I guess.
But it's more about, if we look here, let me slap a ray to this, is you've been bouncing, and I'll make this nice and big for our audience. So you see, this is where Netflix, this price action of non-existence right here, once you start...
When was that?
That was back that was COVID. No, sorry, that was the recession, the start of the recession. So 2022, so Netflix is
not
highest,
recession, correction.
But looking at this, you're knocking on the door of 500. There's a lot of people that this area right here, if Netflix has like a massive beats, this sell zone right here basically comes invalidated because people are like, oh, look, I see, I'm going to make money. I'm just going to hold it. And like that psychology game plays into it. And you basically have these like two regions, like get above 567 for Netflix, which it's a region of approximately 17%. So I think I would definitely think once you get above 570 on Netflix, they're blue, you're just every short's going to get obliterated. However, you're going into this area where it's like that 520, you get above 520, it's going to be very interesting.
Well, regarding Netflix, I mean, we'll cover this on the live streams because we are going to live stream pretty much every day next week. Yep. Right, Mike? I'm assuming we are. Because even on Monday, we got companies like United Airlines, which that's a controversy.
Is that before or after the market?
That's after. That's post.
What is it?
Post market.
What's their United ticker?
UAL, I think it is.
Yes.
UAL. Yeah. We also got Logitech, right? We also got AGNC. We got a few. We got like two big ones on Monday. On Tuesday's the big one, right? That's Verizon, Netflix, 3M, GE, Raytheon, Johnson & Johnson, Halliburton, Lockheed Martin, Procter & Gamble. D.R. Horton might be one that we may want to take a look at. That's also on Tuesday because of the whole housing thing.
Tuesday's jam-packed.
Tuesday jam-packed. Wednesday's a little bit jam-packed. Thursday is massively jam-packed.
What's Thursday?
Thursday, American Airlines, Intel, Visa, NextEra Energy, Southwest, Valero, Capital One, UNP, Blackstone. Yeah, it's a decent amount. It's a decent amount. So, yeah, it's gonna be an interesting one. And so, who knows what could happen, right? We may have just gone to all-time highs on the S&P 500 just to come crashing back down next week. Right?
Well, see, that's actually happened in history. That's actually happened in history. Germany had that situation. Bitcoin has that situation. If we go to BITC, I do want to show this because this was actually quite fascinating. If I actually find Bitcoin futures. So if you look at the when Bitcoin broke to all-time highs, right? So like it came to all-time highs, came again, failed to hold it, and then sold off. So Bitcoin's trying to break to this upper region right here. And the riskiest asset in the market is struggling right now. So it's very interesting to see. I'm like, this is where you would expect risk on to be. and it's not, right? So like Pierce is up to 49,000 and is selling off. I'm like, and you're dangerously close to losing that trend on a weekly basis, and you're basically forming a lower low, but it's a failed hold. So if Bitcoin closes below 4,100 roughly, I would start getting concerned. And the other thing is that like volatility in bonds yields are green for the year, while S&P is making new all-time highs. I'm like, one of these things has to be lying to us. But again, like Warren Buffett says, have patience, so that way wait for the pattern to play out. And we're going to see what I think this week, especially with Netflix and Tesla, we're basically going to get the answer. Is this going to be a massive earnings beats? Because if Netflix and Tesla both come out with stellar earnings, you're pretty much cementing the tech rally in there. And basically anyone betting, aka all these short positions, are going to get absolutely creamed.
Hammered.
Hammered. I mean, what happened in 2023 to them is going to we're going to have a hold my beer moment. And this rally,
Agreed.
Just for all those that weren't around during that time, if you look here, so this is the weekly, so 2023, so 2023 starts right here, and all it was a cream fest to higher. They never broke even. It was literally, they just kept adding on, getting creamed from May till July. So again, it was very interesting. And even with the debt ceiling negotiations and stuff like that, that didn't even they didn't break even. So it was very, very interesting year. Definitely could be setting up for one as well, right? So, are we going to double top? Are we going to go higher? I think that's going to be a very interesting question to ponder this week. And
so, yeah, I was just about to say, where are we at when it comes to the fear and greed after that massive rally? We are touching extreme greed, and we know what happens when we go into extreme greed, right? So
a lot of shorts lose a lot of money.
Well, that, and most likely we're going to get a swing back eventually. So that usually is what happens. You can't stay at extreme greed for forever. You can't.
Correct. So, however, we just got a swing back to neutral this week. We were at neutral, I believe, right before TSMC earnings, which means that we we flushed out a lot of that neutrality now. So now we are setting up possibly for the next extent of extreme greed being around for a week or two. So we flushed out to neutral, and we're heading back in the other direction. I'm going into tech earnings. I'm I know people want to be bearish, and don't get me wrong, I still have my bearish theory. Guys, the yield curve is, for lack of a better term, doing loop-de-loops on itself, and everyone that's followed the channel knows why I want to scream at the top of my head when I say that, because someone, aka who, said it was going to do loop-de-loops on itself, and here we are again. So
that's me, by the way.
Yes. But literally I was hey, we're at a plateauing at the same point, triple bottom on the yield curve. I'm please don't be loop-de-loops. And here we are with loop-de-loops. So this thing can cream us for the next month or so, going absolutely sideways because it's just refusing to go down. It could be very interesting that if we set something up like this, where we just go sideways for a year. That would be very interesting and not historically out of the norm. 2008 or .com had that situation before it uninverted. So could be a very interesting time in the bond market. And we'll keep you guys updated as always. Eventually, like we said, this thing's going to come down back to zero and all hell is going to break loose. But in the meantime, to all those people that say that we're bears out there, I'm yes, long-term bear, really, because there's an inverted yield curve. But I'm going to look.
Yeah, go on.
I'm going to look for that opportunity, bull or bear. I don't care if I'm being long the market or short the market. It's where do you find opportunity?
Exactly. So that's why, with me, I'm just I would like it for things to be more affordable. But if it's not, that's fine. That's great. If the market keeps going up, I'll sell cash secure puts. If it decides to take a turn, I'll sell covered calls. So there you have it, right? I personally don't care. So yeah, guys, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. And of course, make sure to follow us on X as well. So next week, we're going to be live streaming pretty much every single day. We're going to be live streaming mainly the earnings and any news that may or may not come out. So with that said, peace out, and we'll see you all next time.